Hello, good afternoon, everyone. Welcome back to the channel. Let's see if this works. I'm just testing right now. I just did a whole entire live stream and it's like not showing, so I'm not sure what's going on. That's weird. Anyway, okay, folks, sorry about that. I just literally did this video and it just got lost into the ether, I guess. So we're just going to try to regroup real quick. So thank you all for tuning in. I've actually unveiled or I'm unveiling a brilliant strategy to completely eliminate NAV erosion that I've figured out. So when we did the J interview and we did the follow-ups to the J interview, we established that the strategy that we thought was being implemented to eliminate NAV erosion on YieldMax's part is actually not in effect. It's actually in the prospectus for MSTY and maybe a couple other of their funds. So they have the option to do it, but they're not currently doing it. So any NAV stabilization that you've seen is a result of the market. But nonetheless, we've figured it out on here, and we're going to get into that very shortly here. So yeah, see a little backstage tour here. I had the video created. It just, I guess the first video was what we'll call a practice run. So anyway, stay with me here, folks, because I am going to show you all how to perfectly eliminate NAV erosion. And so it starts with basically being able to trade yourself. And so a lot of you that have been following me for a while know that I've been preaching learning skills yourself and learning how to trade on your own, particularly trading options. And so what I'm going to go over is my own strategy for completely eliminating NAV erosion. And like I've said, it basically is learning how to trade on your own. And guess what my NAV erosion is from this strategy? Zero. So this account, and we're going to go over one of two, we're going to go over two accounts, but this is the first one. This account has grown incredibly. And I want to preface this all that I'm not bragging, okay? I'm trying to teach you all. This is how I want to like impact the world. I like seeing people become financially free, financially independent. It's a great feeling. If you can get there, it's a truly amazing feeling, not having to be dependent on an employer or a pension or being tied down on a fixed income. If you can become financially free, it's incredible. So this account I have grown to this amount, which still boggles my mind. And I'm going to show you a lot of it has come this year because I have basically gained far more in income than I've been making in dividends. So over here, to be sure, this is my net gain year to date. And what's really amazing with this, folks, is that we're not even halfway through the year. Let me test something here. Okay, now we have you on. So thank you all for your patience. We had some technical difficulties earlier. We got Jonathan on. He says, hello. You know my strategies for NAV. He says NAV Erosion. I'm not sure what NAV Erosion is. Don't use Misty. Well, hey, that works too. But MSTR with your capital and right calls against it. There you go. Exactly. He's thinking, he's speaking my language. We're going to the moon. Exactly. We are shooting up to the moon here, folks. Quel de la Fée. How long do you think this boom up market will last till M2 money supply levels? Well, eventually Papa Powell is going to be a goner, and I think when we get a new Fed chairman, the market's going to accelerate even further. So I think what's going to happen, and in February his term is up, so Trump's going to replace him with somebody else. Could be a MAGA loyalist, who knows? But when that happens, there's two things right now, two big macroeconomic factors that are going to like absolutely skyrocket the market. And I'm certain that they're going to happen because they have to. One, the Fed chairman's going to be replaced. The new one is more than likely going to cut interest rates because Powell, like Trump's branded him too slow to act Powell. Like he kind of is. I mean, if you look at it, the whole run up in inflation in 2021 started with Powell being too slow to start increasing interest rates. Now he's too slow on the downside, bringing them down. So once that happens and once this tax bill gets passed, whether you agree or disagree on the merits of tax cuts and all that, once this tax bill passes, it's going to be a huge jolt to the markets. So get ready. Hold on to your pants and get ready because it's going to be a wild ride. And I think a lot of it's going to be straight up. So anyway, this account, folks, and this isn't easy for me to show, just so you all know. Like this is not easy for me to show, but I'm doing it because I like to believe I'm very transparent on here. So my gross gain is nothing but gross. Total gain for the year 139,184.42. Total losses 26,689.15, which results in a net gain of, and we're not even halfway through the year, but 112,495.27. Gain loss ratio 83.91%. I've even blown away my own expectations. I'm shocked I'm even able to do this. And this should prove if I can do it, anybody can do it. I have people in the audience that work outdoor jobs that don't have a formal education that are doing even better than this. So anybody can do this. It's just like I said in my last video, kind of went on a rant, but it's like everybody loves dividends because dividends are like money that comes to you without you doing anything. But while you're sitting there not doing anything, you have NAV erosion. And obviously, right now, we don't have a way around NAV erosion from the fund managers, so we've got to figure out a way around it ourselves. And this is exactly what I'm showing you how to do. This video, honestly, and I know it won't, but videos like this where I'm actually teaching a skill should get more views than my fund manager interviews. Truly, if you think about it. So, how did we get here? This is what we're going to show next. So if I go to, let me show the heat map here for one account because it won't show for both of them. So my ratio in my main account's actually higher, but you'll notice in the middle of the year there was a big gap here because I slowed down significantly on the trading because the market started pulling back in like February and March. And also I'm subject to a pre-clearance policy at work again, which I just got put back under like around this time. So my trades now are going out further. I'm going out for a month or more. But you can basically see since the beginning of the year, I've been trading and just basically it's almost like paycheck after paycheck, and they got bigger as time has gone on. I've had some big losses too, but like look here, NVDL, I've made so much with this just wheeling it on the call side and the put side. And this is what's so great about this strategy. I mean, anybody can do this. You make money on both sides, and we're going to go over example trades too. So look at this one, 6,300 here on the run up of SMCX. And I only had 10 of these open. I should have had like 20 of them open. But what's happening, like I say, money begets money. So it takes money to make money. I can't tell you how many people I have come up to me. They say, "Hey, I have $100. What can you do with this? Can you turn it into like 10,000?" I'm like, "Mm-mm." They're like, "What? You're the money guru." I'm like, "It doesn't work that way. Like, money doesn't grow on trees. You can get here, but you've got to put in the work. You've got to have a little bit of money to begin with and the more you grow your account and the faster you grow your account, the easier this gets to be. It's like the saying, money begets money. And one thing, if you all don't take anything away from this video, this was a profound thought that I had as I was thinking to myself. Everybody, like, I don't want to say everybody because it's not everybody, but it's a lot of people. Because you see in the results, you see in the views, you see in what people want to watch. People like want it handed to them. They either want to hit the lottery, they want dividends, they want like the easy way out. But something happens metaphysically when you earn money yourself. It's almost like I want to say like a blood relationship. Um, Not to be overly philosophical, but it's like something metaphysical happens. It's just like when you're in school and your professor tells you to write down notes on paper. When you put pen to paper, something happens that's different than you just typing it. It's like you have a relationship with it. When you earn it yourself, it's not like hitting the lotto. I've had people in my family that have told me before, they're like, "Oh, well, I'm just going to hit the lotto one day." And, one day all your hard work's just going to be put to shame. Guess what? I honestly would rather earn money the way I'm earning it than hitting the lotto because you know how many people that hit the lotto go broke? And sometimes on these trades feel like hitting the lotto, but you worked for it. It's like hitting the lotto, but you actually earned it. So that's the great thing about it. Anyway, enough philosophy here. This is like financial philosophy. So SMCX, you'll see a lot of these here, but the bigger trades, including my biggest one of the year, came just within the last 10 days. So if you look down here, in this account, $18,505. This, folks, is nuts. Like I remember when I didn't make this in a year, and this was like one trade. Now, what you'll notice, what I'm doing is, so I collected this much in premium for selling to open, and then I bought back because Nvidia had a great week. It had an absolutely great week, and the leveraged ETF NVDL did even better. So when I saw this, I saw I was sitting on this. I'm like, I don't want this to fluctuate. I don't want to let this gain go. So I went ahead and realized the gain, bought it back at the much lower price, and then I turned around and bought or sold back into it at almost the same amount. So what I'm doing is it's kind of like the same as rolling up, but I'm buying back at this amount, or I'm sorry, selling back at this amount. Um, and then I'm hoping to realize the rest of the meat off of that bone. And so it happened here And here with SMCX, SMCX I botched a little bit. I could have actually had way more. But NVDL pretty much crushed it. This one, the fill price I got on this one was amazing. This fill price was like 500 more than I even expected it to be. So I made up for what I lost in, or I didn't lose, but you'll see my biggest loss and my biggest gain of the year came the same day. This NIP fund. This was a dumb pharmaceutical stock that I bought calls on, and there was a time I was ahead, but I ended up being lucky to even get this much out of it at this point. But nonetheless, that's kind of lost in the shuffle in the midst of these gains here. So these last, if you look at it, these last basically 5 gains are a big chunk of the overall, and this is just one account. I do the same thing in the Roth, which is a smaller account. So the Roth has only added probably another 5,000 to the mix. My ratio is much worse there. I don't know why, but I feel like I have my money more constrained in that account. I've kind of had the gains haven't been as big because there's not as much money there. I just got called out of AT&T because I wheeled in and out of it. I was holding the bag on AT&T for years. But you'll see, because I'm transparent, I show everything. So that's the Roth. So if I add the 5,600 and the Roth gains to the brokerage account, you'll see the total here is 112,000, which is a six-figure full-time income. So let me show you all now. So that's just one account. What I also did, I took my first 401k from JP Morgan, I rolled it over to Fidelity, and you'll see here, this is it here. I rolled it over at 480,000. I've already grown this 70,000 in less than a month, basically. Let me read some comments really quick here. I should start an ETF, but it is expensive. Long live Ulti. All my money's tied up in BRKB. That's not a bad fund. Right now, I want to free up that so I can buy dividend stock you guys talk about, but I'm down like 6 grand. That's not bad, but you're holding the bag. Ant DL, agree people need to learn how to trade. Thank you. See, we agree. All right. So, wow, 53 on an options video, 53 live viewers. Let's get the count to 100. And by the way, I'm not sure if that super chat feature works, but feel free to test it out. Um, it's like free advice here. So, all right. So I have a Roth. So my Roth, I started the Roth with my 401k until I was like 26. I started like my own Roth. So before I was doing it here, so there's like a Roth portion and a rollover portion of this account. So both of them I'm trading in. I got into TSLL after Elon Musk ran his mouth a few weeks ago. Did I was up really well in that one, but this one fluctuates a lot. I just cashed out of some actual call options that I had sold. I bought them back to just lock in a gain, and I'm just gonna keep playing with that, honestly. And so you'll see here I'm in SMCX at $53 strike price. So that's 13,000 in premium. So before the video is up, so you all stay tuned, we're going to get into a lot of valuable stuff. I'm going to add up every open trade that I have that I've collected premium on, and I'm going to add it to what I showed in the account. So I'm not at my full realized gain. That was 112,000 over there, which is over here on Schwab. 112,495. We'll just say 500. Um, and then I've got this one too, which I've realized some gains in too. But I'm going over the open positions in the account right now. I opened up MSTU $10, NVDL at $80, and see I'm up in these. SMCX I went to $53 because it had such a good day Friday, but then it pulled back a little bit. Keep in mind, folks, if you want some more free advice, June 30th tends to be one of the best trading days of the year historically because it's also the day that the most money is moved in the economy. It's the exact like midpoint of the year. We're getting into like peak summer. We're right before 4th of July. A lot of companies are finalizing their payrolls and their budgeting and their headcount for the year. So that's when the most money is like moved in the economy, and it's also a huge jolt to the market. I actually expect on June 30th, I could still yet add to these gains, the realized gains, and roll some of these out. Because if we have a really good day and if the tax bill passes by 4th of July, a lot of these things could run so far up that I just end up buying these back at a much lower price and realizing the gain there. But anyway, so we've got MSTU, we've got NVDL, we've got SMCX, we've got TQQQ. So what I've done, I've gone really aggressive because I'm an index investor, but and these were in and I grew this account grew very impressively in the employer's funds for years. I've had this account for like 10 years. Grew it from zero. So literally I started with zero. Like I think we all do unless you're a trust fund baby or something. We all start with zero. Some people think that's a flex, but really we all start from zero. Anyway, so what I'm doing here on the index side, instead of buying NASDAQ, S&P, and so on, I got TQQQ, which is triple NASDAQ, and UPRO, which is triple S&P. So it's triple the leverage, and you'll see the gains are triple the gains. So some of you will freak out about NAV erosion, or you call it NAV erosion when it comes to these funds. It doesn't actually exist, but what it is in the leveraged funds, it's a daily reset. Because if you look at the positions these funds are in, they tend to reset daily. And so in the short term, they follow their investment objective perfectly, but in the long run, it's not always exactly a 3x or a 2x. But guess what? If you look over time, that gain in these accounts is a hell of a lot better than what you're getting just holding the S&P or the Nasdaq. So for me, I have an aggressive style and I'm sold on having these as my underlying funds. Now, this account, I will need this to fund a business very, within the next 3 months. So I'm hoping all of these gains and stuff are going to really jumpstart. Basically, it'll pay for all the startup costs. That's the goal. That's what I'm doing with this. It's called a Rob's process to basically basically this is going to be a C corp. So anyway, that's another story that I'll get into when it happens. But let's go over activity and orders here. Let's go over the actual the realized gains in the account. So this one, so if you look, I just moved this over May at the end of May. This account has grown from 439,000 to 482. So that's like a $43,000 gain or so. Yeah. And so a lot of that has come from trading options. So the gains have accelerated from where they were with the employer. And I'm trying to find because Fidelity is tricky when it comes to actually showing like your trades and stuff. Here we go. I think this is it. Okay, so there's the market change in that one. Let's see here. I want like balance and returns. Performance. It's tricky. I think I actually have to go into, let me go into the Discord because that's actually where I put it. Okay, so I put it in, and if you all are not members of my Discord, I pretty much show all this for free. I can't remember where I found this, but let me pull it up. So this is the Fidelity account. This is what I made on Thursday. So believe it or not, actually, wow, I lied. My biggest trade was not that $18,500 one. It was this one right here, this 18,869. Wow, I didn't even realize that. I thought it was like 16,000. So basically, because I sold 75,000 worth of premium, I bought back 56,000 worth. The difference is 18,869. And then with SMCX, the difference here was 7,800 because I did a $48 strike, so I was more like in the money. And then the day Elon Musk went on his tirade, I did one call option. I bought the call option actually, or maybe I sold it. No, I'm sorry, it was a put, a $295 put. Realized all of it. It was like the last day, $721, easy gain, just like that. Sometimes it can be that easy. And then my call options I was talking about for TSLL, I collected 15,773 in premium, bought it back for 13,227. That is a $2,500 net gain, and I'm going to buy this back again, or excuse me, I'm going to sell it back because I believe TSLL is going to hover around $15 by December. So when you look at an option, the TSLL is the ticker, 25 is the year we're in, the year of our Lord 2025, right? December is the month, 12, and then 19 is the day. So December 19th is when this bad boy expires. And then C means call. It's not our grade on the trade, but it's the call. Call. P is for put. So C, $15 is what they call the strike price. That's the price that you would end up owning the underlying security at if you were to get assigned. So then in the Roth, you'll notice I do some of the very similar trades here. TSLL did the same thing, bought much less because it's a smaller account, of course. Same with SMCX. So if you add these together, folks, this is on the calculator. I'm going to break all this down, like I'm saying. If you add up the 112 for, let me, to be exact, I like to be exact, 495.27. Okay, 112, watch this. 495.27 plus the gains in Fidelity. This is going to be, you're going to see where I've my realized gains for the year. So this is another 29,928.34 plus 4,307.46. Boom. 146,000. 731.07. We're getting into mid to high six figures now. And then, so that's the realized gain for the year, 146,731.07. I can't even believe that I'm saying that. Now, what's so funny is that, like, if I go back to 2019 before COVID, when I was in a job I hated, I was like, I got to find a way to get out of here. So that's when I started dabbling into stuff like this and really aggressively investing. But I didn't have as much money at the time. Like they say, money begets money. So when I stumbled across YouTube and then realized I wanted to be a YouTuber myself, because I'm like, wow, I'm doing the same stuff all these other guys are doing. Um, I started learning some of this stuff, but my goal at the time was just to be able to replace my $90,000 work income at the time. Now it's like the goals have evolved. I've like far exceeded that. Now I'm looking at multiple full-time streams of income. So my number one stream of income right now is trading. Who would have thought? My number two is my full-time job. My number three, believe it or not, is dividends. So if I go over here, watch this. So I still consider it, even though, we're getting to a higher level here, I still consider this a full-time income for year to date. This is about half of my current work income for the year, but it's 28,545. That's on pace for like 60,000 or so. And if you look last year, I was at 64,308.96. So that is like my third full-time income stream, which is just crazy. I mean, this year, who knows, folks? My goal is like I could do like half a mil this year. The YouTube ad revenue is not full-time revenue, it's just very, very passive revenue. Just like revenue that I get from, say, like renting, um, or for like my step bet games or a little bit of gambling I might do on the side. Those are all like much smaller incomes. But like this, folks, is another full-time income. Look at this. See, almost 5,000 a month. It dipped here, but it's coming back. It's almost at 3,000 here, but it does fluctuate. But the average, if you average out these 6 months, we're averaging, close to 5,000, I would say, between 4 and 5,000. So that's the other stream of income. That's not as exciting to me. I know you all get off on dividends and it just excites you all like nothing else. But for me, the trading is what really excites me. Now, what we're going to do, we're going to add up my open positions and just say, hypothetically, because it may not happen, say I'm able to realize all the gains for the positions I have open. Watch what this is going to be. This is going to blow your minds if we're on the same page, which I think most of my audience is. Maybe not all, but most. I'd say 90%. That's a good estimate, right? Let me see here. When I'm in doubt on certain things, and some of you all, you ask me, and this is a fair question. You all ask me how I pick my strikes, how I pick my expirations. Am I doing technical analysis? I do a lot of complicated analysis when I pick these, but one of the things I do, I consult with the advanced financial forecasting equipment, which is highly advanced and customized, also known as the magical 8 ball. So what I'm going to ask it right now, because I haven't asked it any trading things, I'm trying to give it a break from that because it's a weekend. What I just asked it telepathically, by the way, I asked it, is 90% of my audience on the same page as me? And it just told me, as I see it, yes. So I'll take it and believe it for now. But that's one of the things I do. And really, it's just a judgment call. It's not so much, oh, the technicals, because that can change every day. Like I just looked at the technicals Friday for SMCX and it was showing no pullback. But by the end of the day, my gut feeling told me, and you develop a gut feeling as a trader, by the way. So my gut feeling told me that SMCX was going to pull back by the afternoon Friday. And sure enough, it did. It's just that what happens is that you get a lot of voices in your head at the same time. One of them ends up prevailing. One voice was like, you need to get in, you need to get in, it's going to run up. The other was like, hey, no, it's going to pull back. So I went ahead and got in again at like 2 o'clock, but by 3, boom, it pulled back to where it was Wednesday. And then I was actually way down, but then it came back up as the market closed. So you've got to really keep an eye on the market throughout the day. But anyway, not to get sidetracked, I'm going to take what I've realized. This is the realized portion that you see on the calculator here, and I'm going to add to it the current positions I have open. So I have an MSTU position here for 73.60, or excuse me, 73.29.62. And then I have 53,679 that I sold in VDL for again. Oh shoot, I'm screwing up. It's 62 over here, and that's going to be plus, so that's 154. Watch how this goes up. Plus 53,679.62 for NVDL, plus, so we're over 200,000 now if we realize all these, plus another 33,386.42 for SMCX. So look at all the positions with a negative number. Those are all ones that I've sold. So then boom, that's 241. So now we're like talking like executive pay now that we're just earning, at home here. Okay, so that is in that account, and then we've got one position in the Roth. Then we're going to go over the Charles Schwab ones. Sorry if there's a little feedback. I'm trying to not keep the mic too close to my mouth here. And then we've got 13,618.56 over here. That's 254,745. By the way, as a reminder to the audience, how much NAV erosion have I experienced with the strategy? Zero. Zero. Remember that. No NAV erosion when you do this. And can you make this much in dividends? Probably not, because you're leveraged here. You're making it's like leverage on top of leverage, which can be dangerous in a down market, but you're making this on, you know, good underlying companies. All right, so that's one account. So we're up to 254. Now watch what I've sold for in this one. So if I go to positions here, now I am showing an unrealized loss in the positions I hold and this account over here. But what you'll notice, because I'm doing so many options, there's not much money actually invested in the account anymore. So like right now, basically you see all of this here, and I can't even believe this account is this high. This account has grown so much, it's amazing. Um, but of the 333,000, only 313 or excuse me, only 20 of it is actually invested. The other 313 here is actually in cash that's collateral for the options positions that I have open right now. And I could actually open more, but I don't want to max out my risk. And then the IRA, half of that's invested. So as you see, of 418,000, 350 of it is basically in collateral because you need to have the collateral for these options positions in case you get assigned. So if you were to look at my unrealized gain, which I don't really show, a lot of it is in yield max, which I'm holding the bag on, which I may sell. I'm thinking, by the way, with this kind of gain, I may go ahead and absorb the loss on Tesla, which I showed you all in another video, by the way. My Tesla shares, I'm still at a loss on. So if I go to Tesla real quick over here, this isn't the one. It's complicated math, and I did another video on it, so I'm not going to spend too much time. But basically, I'm still down 3,000 after all the dividends and stuff. So after all the dividends and stuff, I'm basically still down because I bought 80,000 worth. There's only 25,000 of it left, but I've made almost 52,000 in dividends. And this may be a little higher actually because I haven't tracked. Basically, I've been getting dividends on this one for, I want to say, almost 2 years. Yeah, over 2 years, so 25 months. There might be one or two more that I missed in there, but that's Tesla. So I'm thinking about actually dumping that and absorbing the hit. As far as positions I have open, so let me go to transaction history here, and I will show you all. This is the Roth. So I just sold to open some SMCX in the Roth and MSTU. So this was Friday. So I collected another 1372.04 in premium here, plus another 1579.34 in premium here. You just collect premium. So instead of just sitting back collecting dividends, you're doing it yourself. So then on the 26th, I also did another because I got called on my AT&T, so it gave me some leverage in the Roth. So I did another 71.57 in premium for NVDL over here. And I'm telling you folks, the more money you get, it makes this a lot easier to do. It's like money begets money. One day I'll probably be doing this for like $1 million. Who knows? Then I might actually buy a better car than a Honda Civic. My situation's still changing where I'm still in kind of like the mindset I had, like just the average middle class mindset. You notice I'm not really like I don't dress like I'm rich, but I'm kind of getting there, I guess, which it's things are rapidly changing, which is great. And it's a great feeling when you all do this too. And I want this for all of you. Everyone on here, that's why I do this. It's not for the money that I'm doing this on YouTube because the ad revenue, honestly, I have had a good month this month, but the ad revenues is nothing. It's worth it more to me. I just had a buddy tell me that he's older than me. He's been trading in the market for like 20 years, and he said by basically doing what you've taught me, what you've shown me, I've made more this year than I made trading in the last 20 years. When I hear stuff like that, that's what makes me feel fulfilled in life. It's not even about the money being made here, but it's about the impact. It's about getting other people to do this. That way you're not stuck like a hamster in a wheel. in a cage. You're not stuck in that 9 to 5 grind. You have like freedom to actually be a human being, to actually think about things, to actually be like, wow, I can wake up at 10 in the morning and go work out and actually take care of myself so I don't die when I'm 70 before I've even gotten Social Security. You see how profound this is? Like you can completely turn your life around. That's what I'm in this for. And I've always said, because there's people in my family that'll sit there and say, oh, well, he's doing this. He should give us huge gifts and stuff, and he should give us handouts. No, it's not about handouts. And you know why? Because you'll never appreciate it if you didn't earn it. But if I teach you how to do this, you're actually getting a better gift than I could ever give you, even if I gave you a $500, say, wedding gift. If I'm teaching you how to make this kind of money, that's actually a much better gift than handing you money. But if you have an entitlement mindset, you don't necessarily understand that. That's what I'm here to break. And if I break it in one person, I've done my job. If I break it in 10 people, I've more than exceeded my job. And I think I've actually done it for more people than that. So if I have, let me know. There's multiple forms of ways to do that, of course. Okay, so that's just in the Roth. So we're not even done yet, folks. But let's do the brokerage account. So, oh, look at this. I made 565 in interest. Now, that's a good point because CDs, interest on your accounts and all that are never going to make you rich. But this strategy will. And remember, how much NAV erosion? Fill in the blank. How much NAV erosion do we have? I know I'm being a little corny here. Rhymes with hero, 0. And we're going from 0 to hero here, right? All of us. We're going to be getting rich here. I can sense it. All right, so now look at this, 264,000. So here, 33,686.72 in premium. So if those of you that are tracking with me, if you understand, these are if I win all of these trades by September, this is where the account is going to be. This is pushing 300,000, which is just mind-blowing, I have to say. It's it's something else. And we're still not done. So check this out. This one, you know how I told you about wanting to sell back for the amount that I bought in, or excuse me, I keep saying that. I want to sell it back to open it up again at the amount I bought back to close. So remember, I was at 47,192 in this NVDL trade. Well, guess what? I went ahead and did because one of the positions was expiring in January, and then the other one, the bigger one, was expiring in September. So I went ahead and said, you know what? I'm just going to just put all the marbles in, put all my chips out, put all my, I'm all in, all my chips on the table, um, or in the middle of the table. I said I'm going to go because there's more like volatility and fluctuation to collect with the theta decay and all that. There's more fluctuation to collect faster gains in September than there is in January because you're further out. So I went ahead and moved this one up to January as well. So check this one out. So this is, I collected almost as much as what I bought back for. So I got a great fill price on this. It was only like an $800 difference. So see, I bought back here at 37,533. I actually sold back for less than an $800 difference. So I'll take that hit. It's like the cost of like locking in that gain, you know? So it's not perfect, but the execution is there. And the fill prices are tough because if you want to get filled today, if the market's moving fast, fill prices are difficult. All right, so we did that, and then I just added I'm working my way down, right? I don't want to lose track. I think I've got two more. So this was the SMCX one, and then we've got NVDL twice. And folks, I'm like really excited about this because I strongly believe that I'm going to win these trades. And I think, honestly, if you all want to do these yourself, go right ahead. I'm not telling you what to do, but I'm showing examples here because I think when the tax bill passes and when they start cutting interest rates, you think 3 months from now or less than 3 months, less than 90 days, these are going to be expiring. So it's an exciting time to be alive because in 90 days we're going to know if we win all of these or not, or even if we win some, I'll just buy them back. So 17,843 here, 36, that's another one. And then last but not least, certainly not least, 36, 746, 72 here. Boom. If I win every trade, 353,130.82, and that's by September, that means we still got 3 months to go to trade even more. Even more. Now I'm having conversations with some friends, they're like, well, why have you thought about like, do you like, would you quit your job? I'm like, no, actually, because I like the benefits because I'm still stubborn. I grew up poor, so I'm still really stubborn. I'm still like, yeah, but health insurance, I'm going to be spending like a lot more on health insurance. I'd have to pay my own social security, which is like double. There's a lot of benefits to being employed. I will say I know people society thinks work is overrated sometimes, but there's a lot of benefits to being employed, I will say. Now the other trades I want to show is I opened up MSTU. This was one in the beginning of the month that I haven't counted. So there's actually another, let's see, 10,378.76 to add here, plus 1465. And this is a call option that will never reach the price by expiry. So it's really 365. So that to me, folks, right here, this is the perfect salary. It's $1,000 for every day of the year, right? It's just short. Well, we're actually just, if we could squeeze out, and we'll get that in interest too, if we can squeeze out another basically 2401, oops, I meant 2501, then look at that. We are at $1,000 for every day of the year because there's 365 days in the year. Boom, 1,000. That I've always said, folks, and I just realized that doing this video. I've always said that's like the perfect salary. So now enough about that. And we've been ranting a while. Let's go over some examples. Let's go over like how easy this is to do. Wow, 78 viewers. Let's get us up to 100. Okay, we picked up 2 subscribers. We need to keep going. Another show I know, but everybody hit the like. Yeah, please, folks, smash that like button. It helps the algorithm tremendously. It's the best thing besides super chatting you can do. And I know a lot of y'all are tightwads, so I know nobody's going to do that. Maybe one of you will, who knows? We got Pirate Justin says, always keep your job if you can. My job isn't easy but convenient these days because I work from home. That's perfect. Can work from anywhere within the USA remotely. Or even if you get outside of the USA, you can be like an expat. You could be like a global nomad. That's something to look into, by the way. I've actually thought about that. Once I start traveling the world, which I'll probably do with some of this money. All I want's about 7,500 a month. You can do that easily. Chafflin Full, do you have TSL shares selling calls? Or you bought the calls. No, I have the shares and I sold calls because I'm okay getting called out of that at the $15 price. Can you show how to stop loss? I don't because you get ripped off on stop losses. I don't even bother with stop losses. I have thought of it, but what I was talking about the fill prices, you get ripped off. So, all right, now that we have 83 viewers, I'm excited. Is everybody excited? Everybody having a great time? I love making money and teaching how to make money. That's like my calling in life. All right, so let's make some, right? Well, we can't trade on weekends, but I can show examples. All right, so options. Oh my God, it's super complicated, super complicated. You got to press trade. You got to press a few buttons. See, now you know why nobody does it. Okay, so watch this. Super, super hard. NVDL, right? You're looking this up. You're looking at, wow, did we hit $70 Friday? Oh, so I've already made money on those. So you're looking at puts. You may, if it were me getting in right now, I may wait for a pullback. You're going to do put, you're going to sell to open, and watch this. If you were collecting premium by Friday, oh, by the way, the market's closed for Independence Day. By the way, by Independence Day, we should all be celebrating our independence from being dependent on the system. How about that? So by July 3rd, if you were to do this, this would be, oh, I hear that nice noise there. That means new subscribers. That's always awesome. New subscribers are always welcome to the channel. Okay. Spread the word, by the way. We're changing the world on here, folks. We're gonna change the paradigm. We're gonna flip the script. We're gonna change the narrative here. And one good thing before the internet, before Al Gore invented the internet, a lot of people didn't know this. Um, they didn't know this information. This information wasn't readily available to the public. So, that there's something to be said about that. Um, by the way, I was disappointed when I went to Tennessee. I went to Nashville, and there were no monuments to Al Gore, the man who invented the internet. How was there like nothing, no mention of the guy at all? It's crazy, right? Former vice president, failed presidential candidate, but successful internet creator. Anyway, enough about him. Let's make some money. All right, so I would say if you can, so say 10, watch this. You could just, if this expired Friday, you could make $2,000 right here. But if you were to roll out, watch how you roll out, and this is just at the money. So the thing is, if you're doing this, Sorry, my ears are burning. Somebody might be talking about me. Um, if you were to do this to make money, which that was a dumb statement. Of course, we're doing this to make money, right? That's literally every waking hour we're doing. Hopefully, we're doing something productive or to make money. In some cases, to lose money. Best way to, best liquid asset is like alcohol, right? Because you just pee it right out. You're literally liquidating your money. But all right, so July 11th, you see how the premium increases. And you'll notice there's a bid, a mid, and an ask price. You're never going to get filled at the ask price. That's what the buyers are at, basically. You're the seller in this case. So see the big difference here? You can get ripped off, especially the more of these you start doing. You want to go at the mid. If it depends. If you want to wait for a deal, don't wait for a deal, I would say. Don't. And again, I'm not telling any of you like what to do, but you're balancing out. It's either time or money, right? You either save time or save money. So like timing is everything when it comes to these. So if you're waiting for, oh, I want to get that a couple $100 cheaper, which I get because a lot of us grew up poor, $200 was a lot to us, and so you're thinking, shit, if I could squeeze another 200, that's a lot. But don't miss the bigger picture. The bigger picture, okay, is that look on the screen, $4,280. Yeah, it would be nice to have it for that, but even if you get filled at that, it's a big difference. But if the market's going to move rapidly, you're at least in. The worst feeling is FOMO when you're watching that market move and you're out of it, which happened to me uh, Thursday actually with SMCX because I got out of it the day before and I watched that thing shoot up and I'm like, damn, I could have made another 20 grand, you know? So you want to at least be in. And that was I'm saying this, but I do the same thing still because I'm still breaking out of this mindset. So I saw SM6. I'm like, you know what? I got greedy. I wanted to get back into where I sold out. Or I keep saying that I wanted to sell back for what I bought out. It's confusing. You buy to close it. You sell to open in this case. So you're the seller, but not you're selling to collect the premium and then you buy it back at a lower price to realize the difference. Or if you just wait for it to expire, you realize 100% of the premium. So in this case, all right, we're just at the money. See July. Now sometimes it's weird because of different components of options pricing. You have implied volatility, you have theta decay, you have so on and so forth, stuff like that. So see how there's a difference. You're actually getting a better fill price on the 18th than you are the 25th. That's kind of weird. It shouldn't be that way, but these are weeklies. By August 1st, there's a big jump. See? And then by August 8th, even higher. So it's like $300 a week extra. By August 15th, and then they haven't created the new weeklies yet, so you'll see there's a big gap between August 15th and September 19th. So look at that. That's another $3,400. Now watch by December. That's 14,650. And that's just at the money. So the thing about this, and this is what I do, we all believe, let me take a live poll of the audience, do we all believe that the stock market will be higher over time? I would think everybody would say yes. The stock market should be higher over time. So then what does that mean? The stocks that trade within said stock market should be higher over time. So what does that mean? The underlying ETFs that are leveraged for said really good solid blue chip companies that have a bright future should be higher over time. So then what does that mean? It could be, and we're never guaranteed, there's no guarantees in life. There's no guarantees you're going to wake up tomorrow morning. After all, there's risks in getting out of bed. Anytime anybody says there's risks in stepping out of bed. There's risks in getting struck by lightning. After I'm done with you all fine folks, I'm going to walk to the gym. There's a risk I get struck by lightning. And no, I'm not leaving you all any inheritance unless you do something really special, like super chat. Had to make that joke. But okay, there's risk in everything. So okay, when I'm saying that when I'm saying that it's probably going to go up, I'm not guaranteeing that it's going to go up. The language is very nuanced. I'm not guaranteeing that it's going to go up, but it's probably going to go up, right? So when it does go up, guess what? And this is exactly what I do. You're taking a page right out of Coach's playbook. Why am I at 80? Look what that just did. You see? You're increasing your gains. You added another 6,000 of juice. And all this is, by the way, picture juicing an orange in the kitchen. You like orange juice or whatever? Like juicing that orange, you're trying to get as much juice out of this as possible. This is actually the same thing as juicing an orange. getting as much juice as possible out of it. Or it could be the same thing as something else, but that's a little X-rated. We won't get into that. But watch this here. So you want to go at the mid to increase your gain, right? And then say you have enough money. Say you do 20. Say you get at a higher level, then boom, that's 43,000 by the end of the year. Now I'm at September right now, so that's 32,000. So that means I haven't even looked at my trade, but that means what I just showed you all, I've already made 4,000 on it. So that's pretty good. I'm not going to buy back yet because I actually, I want more. I'm going to realize more on it. But, and then watch this. If you go out, because the options aren't all available yet, so you can go out to 2026 or 2027. Watch this. If you go out a year, which is a leap basically, that's not that good. Oh, I'm sorry, that's a month. That's a month after December, so that's January 2026. Okay, but watch this. This one, if you go out to 2027, 64,700. And this is one trade, folks. It's a lot of contracts, but it's one trade, you see? So that's how that would work. Let me do some more comments real quick here. 94 live viewers. I love it. I'm teaching options and I'm getting a great audience. Asking for stop limit because had VOO call that got blown through. All right, I'm glad you mentioned that because here's what happens. If a call gets blown through, you just take assignment. That's all. You just lose your shares. It's a tough mindset to get accustomed to because we see that. I'll give you a perfect example. I'll show you all a trade last year. I had to give up my precious JP Morgan shares because I got called out and I didn't do a stop loss. This was heartbreaking for me actually. And this happened as I was ringing the bell on the stock exchange in New York. So you all are going to see this. This is last year's gains, by the way. It was much, much less. You see, I actually made more in dividends than options, but still, a lot of this came towards after the election. The market started like going really up. So this these gains, you see them all. They all pretty much came at the end of last year. Because it's funny, because from May onward, I got freed up from my pre-clearance policy. And see, I had a couple of losses here, and I kind of just gave up, basically. I wasn't as focused on it until I saw other people doing it. So this is the trade here. This looks like a nice win, right? But it's actually not. On the day of the ringing of the bell, I got called out because I'm like, you know what? It ran away from me, so why roll it? So I'll show you on June, let's see, June 21st. Okay, this was part of my employee stock that I rolled over from JP Morgan. And this was heartbreaking, folks, because like an idiot, I had to sell at a price when I sold a call. Well, I sold two calls because I had 200 shares. So I sold two covered calls in this for a price of 120. And so basically I added the premium. So I sold for 134 and I'm vulnerable. I show you guys everything. I'm not perfect. I make some dumb mistakes too. At a time that the stock was like double the price, I had to give up all of that gain because I didn't want to buy the calls back at a $15,000 loss. So that's why I'm saying no matter what, just get assigned. Don't worry about stop losses because it's just like the bid and the ask, Phil. You're going to get ripped off. Just get assigned is what I'm saying. So see now a stock that I sold for 134, look where it's at now. It makes me want to cry. It makes me want to like, oh my God, like 200 shares. You know what this would have been worth today? I'm laughing at some of my text messages. 287, 57,400. So I sold for like half of what I could have had today. But you know what? Not everything's perfect. You see, 26,000 is worth 56. I actually would have had $30,000 more. So I wanted to go over that example because you know what? Just get assigned, like I'm saying. There's no point because I would have had to buy back at the time it was $15,000 higher. I would have had to buy it back at that same price, so I would have still come out at net zero anyway. So I'm saying just take assignment. Anyway, where were we? Okay, so we went over an NVDL example. Now let's go over XMCX or SMCX. This is another one of my favorites. There's a lot of juice on this one because of SMCI. So say you sell to open 10 of these bad boys. Watch this. This is by the 18th. You would have $5,300. And these are like quarterly, or they're monthly rather. There's not really weeklies with these. But I would say, because I think this is going to keep going up, I was at 48, then I went to 50. Now I'm at 53. So see at 50, and I'm actually now at 53, and I could just keep rolling it higher as it goes up. You can get another 250 from the midpoint here. So That's by the 18th of July. August 15th, you're at 14,000. September 19th, you're at 16,700. And then December 19th, you're at 22,200. So, boom. That's how you do it, folks. Easy enough. What say you all? No margin. Your mom said dinner's almost ready. Come up. Well, that's another way to save money. Still living with my parents, making that's pretty good. That's almost like being a digital nomad in a way. Live with your parents, make 300,000, but don't tell them. So this is just our little secret between all 89 of us on right now. We can all keep this a secret, right? Like it's not like anybody's going to see this on the back end. She just texted you. I don't know why she asked me to tell you. Oh yeah, because you think you're dating her, right? Yeah, you wish. You wish. I mean, a woman that produced an attractive guy like me, you wish you could land a woman like that. Costco 777. That is a good number. 777 is good numerology, so I'll give you that. Live and learn. What's this? Ooey Louie, the sweaty pumpkin. Who's Don Smythe? Yeah, no margin. By the way, none of this is with margin. Thank you for pointing that out to Heffalump. None of this is with margin. Let's see. Asking for the stop limit. Yeah, we went over that. Are you trading with portfolio? No. See, he told you. Why would you trade on the Schwab site, not on their TOS? I use TOS too. Yeah, I agree. Always keep your job. So I think we've gone over, wow, 50. Have I spent 51 minutes with you all and didn't get one super chat? Unbelievable. You all are so stingy. You learn from the best, I guess. Over 100 people watching without Jay. Hey, thank you. You know what? That's a very supportive comment on your part. We did hit 100, didn't we? 51 minutes. Start out. It's what I want to do. I want to mold and motivate you all to do this. Too scared to actually trade. This is what we have to overcome. We have to overcome fear. Let me tell you, I experience fear too. Believe it or not, I enrolled in a jujitsu course because I need to get in shape a little bit, as some of my haters have so aptly noted. And it's I feel fear when I go in. I feel like I'm a klutz. I feel like I'm clumsy. I feel like I don't belong there. I feel like some of the people don't want to train with me. But you know what? I'm paying for it. So that's the best motivator when you're paying for something. I'm like, I'm still going to go because I'm paying for it. So you got to overcome the fear. Fear is a real thing, but the best growth you have in life is overcoming that fear. It's like talking to girls, or it's like going in a social setting. I still get social anxiety, but you've got to overcome that fear, just like with the trading. So let's see here. Good afternoon. That's good. Thank you for that contribution to the discussion. What's the tax situation? It's going to be a lot. I'm going to get busted in taxes. The IRS is going to love me. Okay. Hey, great session, you all. Thank you all so much for tuning in. We had 100 of you on. Please remember to like, comment, and subscribe. And I think this was a successful, I don't want to say I did a bait and switch, but I baited a lot of the audience in with the topic of no NAV erosion. But I'm telling the truth. This is the way to fight NAV erosion. I told you, my Tesla, I'll just dump them because I've made my money back on options trading. So I've successfully fought NAV erosion by selling puts. That is true. That is the way to do it. Khmer could teach me hand-to-hand combat. Yeah, maybe. RIP, folded, sold at a loss. You know, poor Kumair. I'm sure he's a nice guy, but like I saw the portfolio of like 400,000 was only worth 190, and that's not good, man. It's like you're kind of like misleading. It's like you're promising all these dividends, but your portfolio is getting wiped out. Fold his clothes while he's in them. How many contracts do you typically do? I just showed you. You'll have to go back and watch. But like Mr. 777 here, mommy's calling. Dinner's ready. So I am going to have to sign off. So thank you all so much for tuning in. We'll see you all on the flip side. Please remember to like, comment, and subscribe and join Discord. And on occasion, maybe super chat or not. And we will see you all on the flip